When we were down big today, I said on the morning meeting that you had to buy the stocks of the drugs, the foods, and senior growth tech, particularly Meta, the cost-cutting champ. Why those? Because they're not experiencing any of the problems that's facing the broader economy. The drug stocks are twice plus. They do well in a slowdown. Many have good dividends that seemed puny when rates were so high last week, but now long rates are moved so low so quickly that the pharma dividends are attractive, maybe even more attractive. Can the market really be that bifurcated? Absolutely. In the vast chaos of the action, I always tell you, and I'm going to spend another whole segment on because it's important when the Dow's down 281, there are always bull markets somewhere. Right now, for example, we have a bull market in semiconductors because there was a huge chip glut. Now it's ending. Buy AMD. We have astonishing breakthroughs in artificial intelligence. Go buy NVIDIA. Next week, Jensen Huang is going to explain to us how much more there is to artificial intelligence than we know. You can buy Microsoft for the same. You know what? You can buy Adobe after that terrific quarter this evening, and you can buy Meta, even though it was up big yesterday and up big again today. It's not done. Billions of dollars in expenses are coming out of that company, but revenue is going to stay the same or even go up. Of course, some areas are just so in the blast zone that I don't want to get behind them. Can't like everything. The bank's too dicey for me. They've come down a lot. But the seizures and the closings last week are really death sentences for these institutions. I don't like stocks that can suffer the death penalty. According to my friend Michael Semblas, he's the chairman of Markets and Investment Strategy for JP Morgan Asset Management, the healthy banks may ultimately have to pay for the funerals of the bad banks. And those funerals can be very expensive. So there go the earnings. Oils, gripped by a deflationary spiral, not so hot. I thought oil would hold 70. I was wrong. They're in free fall. Joy to pal, not so great for me. And here's the real irony. Why is the Fed still fighting inflation if almost everything has come down in the last 6 days? All the prices are pretty much. Is the Fed fighting inflation when the most deflationary force there is, a collapse in the banking system, is right in front of us? The answer, anything that can go down this much could conceivably go back that much. That cuts to the Fed saying, wait and see next week. And if we get that, the market could be a coiled spring going higher, not lower. The risk at last is to the upside. Bottom line, these are indeed confusing times. But fortunately, we're close to the point where the Fed may feel the need to take desperate measures that could be fantastic for your stocks, for your portfolio. We just don't know if it'll be enough to outweigh the bad from this snowballing banking crisis. But any more bad news tips this one over the edge to the bulls, not the bears.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.